and welcome to 3 Time Ritu Singh, and with me is Arundhati Ramanan. Key headlines from the Mobi Quick reports a consolidated loss of 56 crores in the fourth quarter, as well as a loss of 121.5 crores for the full fiscal year, compared to a profit of 14 crores in revenues rose marginally to 278 crores for the quarter, even as its payments GMV grew 2.3 times over the previous year to more than 1.15 lakh crores.
Fashion handbag and accessories brand Miragio bags 55 crore rupees in a Series A funding round. Round was led by RPSG Capital Ventures and Client Associates Alternate Fund. Fresh capital will be used for product portfolio, retail expansion, as well as building supply chain strength.
Cloud SEK, an AI-powered cyber threat prediction and intelligence startup, gets $19 million across its Series A2 and B1 funding, led by a mix of India and US-based investors. The newly raised capital will fuel its continued product innovation and global expansion, with a focus on advancing its AI models and platform integration.
AI healthcare startup Curebay is eyeing profitability in the next financial year. It's also looking to IPO in 2 years, says the CEO to Reuters. The company has raised $125 million in funding so far and has been growing at a rate of 60 to 70% every year in revenue.
And humanoid robotic startup Biryani will raise $100 million in a Series B round led by Gauntlet Ventures, co-founded by artificial intelligence futurist Ray Kurzweil. The company will be valued at $500 million, according to a Reuters report. Those are the headlines that we're tracking for you today on Startup Street. Now, in what's brewing today, healthcare platform Curebay has raised $21 million in its Series B funding round that was led by Bertelsmann's India Investments, along with participation from Elevar Equity, along with British International Investment. Launched in 2021 and headquartered in Odisha, Curebay operates 150 plus e-clinics around Odisha and Chhattisgarh and says it has served around 5.5 lakh unique patients since its inception. The latest infusion will be deployed to strengthen its in-house proprietary technology stack as well as focus on expansion. On that note, let me invite Priyadarshini Mohapatra, the founder and CEO of the company, for more on this. Priyadarshini, thanks very much for joining us here on Startup Street. Start by telling us about this $21 million you've raised. Can you confirm if the firm is now valued at $75 million? And importantly, how are you going to deploy the money?
Thank you very much for having me on the show. I'm Priyadarshi. Yes, we raised 21 million of aligned capital, and it's very, very strongly going to fuel our growth in terms of expansion into new geographies, which is Bihar and Jharkhand that we're immediately looking at. We're also going to continue investing in tech platform. Tech has been our leverage. We have used tech to create an access to high quality and affordable healthcare in remote, medically underserved rural locations, and we'll continue investing on our tech platform. And this is a journey, this is a purpose in which we are looking at high quality talent to come and join hands with us. So that's the third area which we are going to use and deploy our funds in.
Priyadarshi, thanks very much for correcting us, of course. But so far you have about 150 clinics across Odisha and Chhattisgarh. What is the next logical expansion plan in terms of states, and how many new clinics are you targeting to open there?
So we have observed that in healthcare, there is a movement border. There is an adjacency movement both in terms of patient as well as healthcare services. So now that we are present in Odisha and Chhattisgarh, we are looking at moving to Jharkhand, southern Jharkhand specifically, as the next area of movement. From southern Jharkhand, we will move into central Jharkhand and then Bihar. We're going to add about 150 more clinics in the next 12 to 18 months.
All right, so that will take the total to about 300. In terms of your financials as well, your operating income of about 10.3 crores and losses of 39 crores in FY24. Since then, you have announced that Balasore and Puri circles have achieved operational profitability for you. But what about overall profitability? And if you could give us any sense of how FY25 has shaped up?
We are creating a model where we are creating a concept called Circle. Circle is a cluster of clinics. It's about 50 clinics, because we have to build the infrastructure to support these 50 clinics in terms of the foundational investment into logistics network, in ecosystem that we do. So currently, we are operating in 3 circles, out of which 2 of them achieved operational break-even and the third one is on track. Overall, at the company level, we are continuing to invest in areas like technology, continuing to invest in areas like the health platform, where we will still be burning money. But yes, at an operation level, we are looking at achieving operational break-even at a company level.
Okay, operational profitability and profit after taxes. But I read that you say that your preventive healthcare program that has 90,000 active members at the moment and a renewal rate of more than 60%. At what rate is this really expected to grow with your 300 clinics, with the 150 more that you're planning and the expansion plans you have in other states?
So interestingly, in rural India, unlike urban, people don't seek healthcare very proactively. They actually sort of come to you when the condition is either acute or chronic. Our objective was to ensure that if we're bringing high quality healthcare, we should be able to move them on a preventive journey. A membership program by which, paying a amount like 399 rupees for a year, they get unlimited doctor consultation and certain amount of diagnostic tests free of cost and most of the other services at a discounted play, which has helped them move on this preventive journey. Yes, you're right. Currently, we're very close to 100,000 people on this membership. And as we are expanding our clinics from the current acquisition of close to 10,000 members a month, we look at sort of tripling this number as we go forward.
And these people that you're enrolling in your program, is there some sort of health insurance coverage as well that you're tying up with players for or looking to get or have own plans of entering?
So we have an insurance partner who partners with us. If there are patients in the program who have availed of a program when they go for tertiary requirements for the loss of income and travel expenses that they have, covered for 1,000 rupees a day as hospicash, and we have a strong insurance partnership there.
All right. Just quickly to step back and give us a bigger picture of the kind of challenges you see when you talk about implementing these technology-driven healthcare solutions for, the rural Indian customers. With the kind of database also that you're building, what sort of monetization strategies also would you have?
So tech has been the strongest leverage for us because we realize if you have to solve for healthcare, you can't physically ensure that there's a doctor available in the remotest area. So we had to create where there's a human touch in the front end as well as technology is leveraging to bring the right healthcare service providers to the remotest area. And that's where we have not just used technology, we have used smart technology. So we are healthcare data into the market that we go. We are able to do homogeneous cohort analysis, and that sort of helps us fine tune the healthcare interventions that we want to do in these markets because primary healthcare is a very broad canvas. So unless you stay focused on what you're going to drive, it will be very difficult to responsibly grow in a profitable manner. It has been the cornerstone in driving that initiative for us.
And we wish you the best with it, Priyadarshi. Thank you very much for your time here on Startup Street today. It was a pleasure speaking with you.
Absolutely, my pleasure. Thank you.
Moving on, Biryani Blues has raised $5 million in its pre-Series C round led by Yugadi Capital, a new fund from Carpadium Capital. The QSR chain, known for its dum biryani, plans to open over 100 new outlets across North India in the next 3 years. With this round, the company's valuation has reached $30 million and FY25 revenue stands at $10 million. The funds will also go towards hiring across operations, delivery and corporate roles as the brand scales its omni-channel presence. Joining me now to discuss this further is Raymond Andrews, the co-founder of Biryani Blues. Raymond, thank you so much for taking time out and being here with us on Startup Street. Let's get straight into this. With this fresh $5 million pre-Series C funding, what are the immediate priorities for Biryani Blues in terms of expansion and operations? I think you're on mute, Andrew. Raymond, can you just sort of unmute yourself? Yeah, perfect. We can hear you. Thank you. Go on.
Thanks for having me on the show. Very happy to share this latest milestone where we've raised $5 million. The immediate utilization is over the last 2 years, we've been focusing completely on making all the operational metrics work. We moved our gross margin up by 5% and we are operationally broken even in FY25, which is a big milestone in this category of business. So the rest of the plan will be specifically for expansion, opening new stores, going deep north of India and continuing to deepen our presence in NCR. So 100 new stores over the next 2.5 years. That's the plan.
So 100 new stores and new outlets in the next 2.5 years. So what criteria will guide your selection of the new locations, and how will you ensure consistency and experience across, all of your outlets considering the rapid expansion?
Yes, I think we spent the last few years in doing the standardization in the back end. We are a 10-year-old brand now, and we use a lot of technology in our production. We use German combi ovens to get that fresh feel and make fresh biryanis at each store, while we continue to remain chefless at the store. So very much like many of the QSR global brands, right? We are adopting to technology to make great food at stores and keep it standardized so the taste doesn't change. We run a very great large in-house supply chain model. That's why the specific NCR expansion and the North India expansion, which is very efficient, which helps in expanding fast. The areas how we select is also driven by aggregator insights who tell us where the demand is and where we should be looking at. So we have high probability of success stores when we start the expansion. So other than that, we do a lot of ground footwork. The team is all geared up. We have a large business development team and projects team, which will lead this from the front.
Right, so using tech there to deliver fresh food across the country. But, with a diverse customer base across dine-in and delivery, right? Could you share a few insights into your most popular biryani varieties and how your average order size or cart value has evolved as you've expanded your menu and channels?
Yes. See, the customer today wants choice, not so much variety. When I say that, I mean that he wants to see a lot of options available on the screen, but he's end up most likely going to order a chicken biryani or a veg biryani, right? So we have a long tail, but we excel in the products that we take pride in. So our dum biryanis, which are Hyderabadi style, and our Lucknowi biryanis, they are the top sellers. When we go to new markets, like we've done some launches in Bangalore and all, we try looking at doing one small product like a nuance, just like how many of the do some bit of Indian cuisine expansion. We try to do some launches which are in the taste of the local market, because biryani taste changes every 100 kilometers in India. But the mainstay is always going to be the dum biryanis of the two which I spoke about, the chicken and the veg, right? So that's going to be the mainstay, which will take away 70-80% of the sale. But our screens need to show a lot of options. So we have kebabs, we have beverages, we have desserts, we have the whole. But like I said, consumers are very focused. They come to us for the product that they love, which is what we make and what we've been serving over the last 10 years, which are these two products.
Sure. And you mentioned that you hit profitability. Congrats on achieving that feat, and you reported $10 million in FY25 revenue. So what operational or strategic changes were most instrumental in reaching this milestone, considering you're a 10-year-old company? Also, are you on track to maintaining it this year? Where do you hope to end the year in terms of revenues? And what's the online-offline mix at this point?
Yes, see, the new stores obviously have a hockey stick, but the existing stores will actually move up to about 5% on EBITDA. So that will take care of whatever the hockey stick losses happen when you expand the new stores. We plan to open about 18 to 20 stores within this financial year. So of the existing stores will take up this. Going forward, we will continue to expand by being very selective about where we are doing it, and that's the reason why we selected this home market.
And one of the things is the biryani space is highly competitive, right? So how is Biryani Blues differentiating itself in the crowded QSR space, especially with players like, Rebel Foods and Biryani Bay Kilo? I know also Rebel Foods has invested in you guys as well, but also, including the local places, right? There are local biryani joints. So how do you sort of compete with them? What sort of keeps you ahead of the competition?
So I tell you, we are an omni-channel business. So we run a significant offline. You had earlier asked what's our share of business. So we do about almost a third of the business offline, which is dine-in and takeaway. We have front-end stores, which most of our competitors are a cloud-first format, which are delivery-focused. We believe that our products should be distributed across all situations. So whether you're in a mall watching a movie, whether you're in an airport traveling out, whether you're in a metro. So we open stores not just for delivery, we open a front-end store where the complete quick service restaurant experience is given. The consumer gets a chance to experience the brand. And we operate on a much lower AOV than the other brands that you just quoted. Yes, we want to, our real competition is the burger and pizza segment, which starts at 99 rupees, and we start our veg biryanis at 99. We believe that most of India is not able to afford a good quality biryani today, because most of the products that are available start at around 250 or 300. which takes up a large part of India. We believe that a lot of the QSRs have been able to taste success in India because they've targeted everyone from the blue collar worker to the high-end affluent customer. And that's the only way to get success in this country.
All right, Raymond, thank you so much for joining us on the show, but we're completely out of time. We wish you all the best journey going forward.
Thank you so much, Anand.
All right, it's time for us to take into a short break, but up next on the other side, we'll get you an exclusive conversation with Gopal Srinivasan, the chairman and MD of TVS Capital Funds, on RBI's proposal to relax rules for AIFs through alternate investment funds and what that means for TVS Capital.
Welcome back. You're still with us on Startup Street. The Reserve Bank of India has proposed to relax investment rules for banks, non-bank finance companies and other regulated entities investing in alternative investment funds. Remember, in 2023, the regulator had tightened the norms with an aim to bring in financial discipline, which RBI believes the regulated entities have achieved so far. To understand the positives of these tweaks in AIF norms, Parikshit Luthra speaks to Gopal Srinivasan, the MD and chairman at TVS Capital Funds. Take a look.
I think we should step back and see this in the context of what I see as a new regulatory environment. Starting this time in the budget, when both the chief economic advisor and the finance minister, for the first time at least that I can recall, made the statement deregulation is a driver of growth. We're actually seeing a new wind blowing both in BKC and in Mint Street with the two new chiefs, the governor and the chairperson. I believe that this transformative bold step by Governor Sanjay Malhotra is a representative of that. Let's remember that it was only some time ago where he talked about the need for a new way of announcing policies. He said first a draft policy should be announced. Then he said basically there should be a consultation, and only then the final policy should be announced. There should be no, as they called it, midnight bombs that suddenly appear in the form of policy. So I think that is a fantastic move, and I see that wind of change blowing. Coming specifically to this, what can we say? It is not only a great welcome change at a time when only 30% of AIF money is domestic as per the SEBI record. The SEBI record says out of 12.5 trillion rupees in AIF 1 and 2, only 3.7 actually belongs to rupee capital. It's a very welcome change given that banks have very large treasuries. And the way it is being done is even more welcome change. It has got two very interesting elements. First is it actually records the fact that VCPs need compulsorily convertible debentures and CCPSs. I know this sounds very detailed, but these are the tools of our trade for future price discovery. And it actually enshrines them as equity-like instruments, which is fantastic. The second thing it does is by keeping self-regulation, 25% of the investors are from related in RBI. The assumption is the other 5% of the investors ensure the fund, which yesterday one where basically there were by entities. So I just like the man delighted being done, Malhotra and the entire team.
Okay. Now, this is at a draft stage. There will be stakeholder consultations. What would be your recommendation, considering that the proposal right now caps a single regulated entity's contribution to an AIF scheme at 10% and limiting collective RE investments to 15% in a single scheme? Is this acceptable, or you feel that the cap should be higher?
I think anything more, we are at a zero state, right? And therefore anything is welcome on a lighter note. But seriously, I think 10 is a great number. It was the original number itself. So that is not new. What is new is 15. I think one should make it 25. And let me tell you why. In a AIF, most significant changes in AIF require a 75% of investors by value to come and vote. So 25, if all REs put together in various forms have 25%, honestly, they can't make any change to any of the structural things like who's the manager or any changes in PPM and so forth. And I think that should give a huge amount of comfort for basically the Reserve Bank. So I would recommend 25 if they are willing to look at it. So other than that, I would say it's really well drafted, nothing, no shortcomings, just that 15 can probably make 25. So what the industry, I think, like last time, in fact, I would not take any credit for what I did. I just went as part of the Indian Venture Capital Association's delegation and met the governor and met the other officials. And I think the Venture Capital Association will take this up again, 25 probably.
On the hot seat today, Singh and into the 25,000 crore market with a launch of a range of high-protein chips. Shilpa, colleague, she caught up with Biryani to talk about this latest foray and how the company is aiming to capture the fast-growing high-protein snacking space in India. Take a look.
In the snacking space, India loves its snacking, but there aren't so many better-for-you options, and our endeavor is to create multiple better-for-you options with the biggest snacking categories with protein at the core of it, right? But most chips in the market are fairly unhealthy, and hence we thought we should create something that would be savory, extremely healthy for you to eat, much better than everything else in the market, all chips, and also has a good amount of protein.
Which have been launched? What's the plan for this product?
Live on the 20th. In terms of the product at price rupees, delivering 10 grams of protein, 3 grams of it's just about 100 calories. It's the only market that I know that chips which are but ours is the only one that doesn't have sugar. There's no palm oil. Obviously for chips, they're going to be heavy on quick commerce and on modern trade and general trade. Modern trade, they're going to be there in Reliance, 7-Eleven, relay stores, vending machines like Vendyman and Dalchini, and then a lot of general trade stores as well. So the plan is to get to about 10,000 stores in the near future with chips.
So the last time we spoke was for the launch of your first product, which was the protein wafer bar. How's the early response for that been? And you had also spoken about, launching more variants for that and also a higher protein variant. How far have those plans come?
So, we launched end November. So we've been in market properly for 5.5 months right now. And touch wood, the customer response has been much better than anticipated. In terms of numbers, we've been growing very, very rapidly. I think amongst the fastest growing consumer good brands in the country. We sold more than 10 lakh wafer bars last month itself, and sell more than 12.5 lakh units wafer bars itself. So that's the scale that we've gone into currently. And then obviously we have big, if not bigger, ambitions with the chips as well. Anything with high protein, we have a sub-brand in mind that we're going to create. But I think within the next 3 to 4 months, you'll see that as well.
So you have protein wafer bars, now you've launched chips. What are the other categories that you're looking at that you might enter going forward?
So in the snacking universe, pretty much everything, right? But we want to do this slowly when not in a rush. The largest category is within snacking. So when you look at biscuits is a 50,000 crore market. We're very, very keen on doing something within that space as well. You look at namkeen, that's a 4 crore market. We're not done there, but that's potential cards as well. Look at chips and savories, that's a 20-25,000 crore market. Beyond this, there's a natural transition that will happen into other categories beyond snacking. So let's say breakfast and so on and so forth. But all of that is a little bit too soon. We have it in our pipelines, but a long way to go before we get into every category.
Right, Nikunj, I'm trying to understand, say by the end of this fiscal and also a couple of years down the line, how do you see Super U as a company in terms of also what sales or revenue targets that you have?
So, to be very honest with you, we're not chasing top line. We committed to focus on the few we're doing, do them really, really right. In terms of top are sort of in a sense, not chasing build a SBCM3 positive, and right now the focus is only in that.
Because chips also is a competitive space. There are a lot of other players also that are launching in this space with high protein variants. So how do you see the competitive landscape and how is Super U different? Yeah,
so you're right. It is a very, very competitive space. Given that the market is so big, I feel that there's space for everyone, right? It's not a zero-sum game in a sense. I think this whole idea of protein snacking is a big trend, which we're going to capitalize on. And I think the second thing is just better for you, right? I think a lot of consumers eat chips today, but there's a lot of guilt associated with it. So it becomes a cheat snack, something that was the it's probably it gives you the taste of a chip, so it satisfies those cravings as well. So I think product is going to be our strongest differentiator, and obviously a lot of the stuff that we do with our marketing, right? How we market the product, how do we create excitement with consumers for it, what do we do with flavors, and so on and so forth.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching.